Welcome into June market update. Tony Marlette Jr. at Brookside Tax and Financial Group. Let's take a look at what markets did for the month of May. The Dow Jones was up 4%. The NASDAQ had a big month, up 9%. And very telling, the Russell small caps were up 5%. The S&P 500 for the month of May was up 6%, which is the largest gain that the index has seen since November of 2023, and the best May that the index has had since 1990. Remember, there's the adage, sell in May and go away. That was definitely not the case this month. The Barclays Bond Index was down about 0.75%. That is a result of yields continuing to surge upwards. So remember all the concern about tariffs, economic health, and earnings prospects? Savvy investors shrugged all of that off as there were some pauses in tariff talks. Some countries are and continue to come to the table for negotiations. Obviously, the big wild card in all this is going to be China. But all of these things led to a very successful and eventful month of May. Many companies also offered guidance, and that was something that is normal, but was not really foreseen in the complicated environment. Now, whether that guidance was positive or negative still signals a confidence in their abilities to navigate the complicated environment that we find ourselves in. Also shrugged off for the month, surprisingly, was a credit downgrade from ratings agency Moody's. U.S. debt was downgraded due to our current debt levels and spending as well. Consumer confidence and spending, we've mentioned this before, drives the markets forward, and this has been no exception. So there's nothing to worry about, right? Not so fast. We have a risk that's very prevalent, a type of risk that's very prevalent known as legislative risk, working its way through Congress now as part of the so-called Big Beautiful Bill is the tax bill, which is designed to push forward the Tax Cuts and Jobs Act tax breaks from 2017. There's also still plenty of uncertainty with tariffs and other policy items. Make no mistake about it. Investors who have a plan and stick to it were rewarded handsomely, even though there was only about 6 days of total volatility in April. It was still pretty big at 15% drop. It reinforces a couple of old adages. One is staying the course is more profitable than timing the market. And that's a general investment adage. Two, something you've heard here before, your allocation and your plan should only change when your goals, your strategy, and your time frame change. If you'd like to review your situation with us, feel free to do so. You can reach us online, give us a call, mention this video. Not only will your consultation be at no cost, but you'll also be able to pick up a copy of one of our books on financial planning and estate planning as well. From all of us at Brookside, we thank you for working with us. We continue to look forward to working with you.